It's February 19th, JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but Michael Saylor is, as always, prepared for battle. Serious, focused, laser eyes, so to speak. We have a job ahead of us, my friends. Fong Lee says, every innovation is progress toward an unimagined ideal. Stretch. I want to say that one more time. Every innovation is progress toward an unimagined ideal. Stretch. What is stretch? Stretch is Fong Lee. It's Michael Saylor's. It's Strategy's iPhone moment. This is what they're putting all their focus on. They are following this one course until success focus. They have laser eyes. Nothing is going to turn them away from making Stretch the iPhone moment for Strategy. Adam Livingston says, pro-Bitcoin president, pro-Bitcoin treasury secretary, pro-Bitcoin commerce secretary, pro-Fed chair, pro-SEC chair, pro-CFTC chair, Clarity Act, strategic Bitcoin reserve, state Bitcoin reserves, record level institutional accumulation, IBIT, the most successful ETF launch ever. Banks can now custody Bitcoin legally. Stablecoin rails going mainstream. Digital credit revolutionizing fixed income. President's son owns a Bitcoin company, and you all are bearish? It's only a matter of time, my friends, and I get it. Because as James says, this is officially the worst start to Bitcoin in the first 49 days of any year. So listen, I get it. James gets it. Any of you that are listening right now, you get it. And by the way, congratulations, because you're still listening right now. You haven't completely just capitulated and let us hands. Some of you have just gone, head in the sand, which, by the way, isn't a bad move. I actually went head in the sand back in 2022 and 2023 and was very highly rewarded for it because I could have sold all of my, holdings at a massive loss when a lot of my friends were. And I just said, you know what? I'm just holding. And I put my head in the sand. I ignored everything that was going on and I just held. And now I'm not ignoring everything, obviously. I'm doing a daily show on strategy, a daily show on MSTR. I'm showing up every day for you to create this content. But man, these have been the worst first 49 days of any year. There, I got that right. So listen, it's brutal. You know it. I know it, but you're still here and the rewards are going to be so sweet when they come. Not if, when they come. I am holding. I am riding this thing through thick and through thin. And let's just say, I believe it's inevitable. Okay, moving on. British Hodl says, rate cuts are coming. Liquidity is coming. 340,000 Bitcoin plus or minus 15% is coming. I would love to see that. British Hodl continues by saying all the U.S. uncertainty was stacked into last year. This year is about to get very certain and a whole lot liquid in preparation for the midterms. Watch the dominoes fall. Watch Bitcoin Phoenix rise from the quote-unquote ashes. Lark says, everyone, Saylor's underwater on Bitcoin. He's cooked. Saylor, we're like a company that owns 3.4% of Manhattan with enough capital to hold out till the end of this century. You're telling me it's been a bad week in Manhattan real estate? The loss only exists if you're forced to sell. He's not forced to do anything. You are. That's the difference. And hopefully none of us listening are forced to sell anything because Michael Saylor is continuing to show up and continuing to deliver. Chris says, imagine you're a 70-year-old retiree that wants to exposure to Bitcoin. Owning spot Bitcoin is probably a bad idea because of the volatility. Owning a product that strips away the volatility that pays you 11.25% yield, by the way, ROC, return of capital. So you're probably not going to ever pay tax. If you live more than 10 years, you will, and hopefully you do. But listen, at the end of the day, ROC, return of capital, you're not paying tax deferred for 10 years. It's probably a good idea. That's what Stretch is. And that's why you need an operating company like Strategy that engineers and distributes it. Strategy attracts capital that otherwise wouldn't flow into Bitcoin. And by the way, if I was like 80 or 90, especially 90, and I was just like, you know what? I probably have a good 10 years left, hopefully. But, let's be honest. It's probably about the cap that I'm looking at for, most individuals. That's where you'll be capping out at. And I believe in Bitcoin and I decide to invest in Stretch. In my lifetime, I'm never paying taxes on that because it's deferred tax. And then I get to gift it to anybody in my family at a stepped up basis so they don't have to pay tax. Man, what an opportunity for people to get it. Arkham says Saylor's average price going down for the first time in 2.5 years. For the first time in 4 years, Saylor's average Bitcoin buy price went down. It went down $29 actually to $76,027. Last time this happened was on 25 September 2023, almost 2.5 years ago. That is absolutely nuts. Adam says crypto regulation at 71% probability. You can feel it. The suits finally realized you can't ban math. So now they're trying to tax it, securitize it, and list it on the New York Stock Exchange. Peak civilization. And Hugh says, I've never seen it this low before. And this is the fear and greed index. Now it's over. Of course, he's just having some fun. It's more like 9 or 10. But it's obviously really much in the extreme fear level right now, which, by the way, historically has always been a great time to buy. Will it be the case this time? I don't know, but I'm banking on it because I am buying for sure. And we have a great clip from Michael Saylor coming up as soon as we get back from thanking our sponsors. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides, even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR.
And what a year it's been. This is a very pivotal year, I think, in the formation of the digital assets industry. They say the two most important days of your life are the day you're born and then the day you figure out why. And I think the extraordinary thing that's happened over the past 12 months is I think a lot of us figured out why. Why are we in this industry? And I'm delighted to be with you today because I want to share my why. And my why is going to cover three pretty profound topics: the formation of a new asset class called digital capital, the formation of a new business model, the digital treasury business model, and the formation of a new asset class, digital credit. And I think 12 months ago, we knew that digital assets were auspicious and we were all very bullish on Bitcoin. But I really think the past 12 months have provided extraordinary clarity about these three topics. So first I'll talk about digital capital. I think the emergent consensus in the world over the past 12 months is Bitcoin is digital capital. There were some pretty pivotal events. The Red Sweep was a pivotal event. The appointment of 12 pro-Bitcoin cabinet members was a pivotal event. When the president said we're going to be the superpower, the Bitcoin superpower, that was a critical event. When David Sachs said Bitcoin is digital gold, a digital commodity, the global commodity, it's March of 2025, when he went on television to assert that Bitcoin was special and recognized for its commodity status. That was a pivotal event. And we bandy about, this phrase, digital gold, and people talk about, is it just a store of value? Can it be successful if it's only a store of value? Well, there's a theme to that, which is the bug is the feature. And I think that the humbling epiphany of the past 12 months is every criticism and every bug in these asset classes, in this industry, in the treasury business model, has turned out to be the feature. And here, store of value means capital. Gold is store of value. And if you are store of value, and if you are digital gold, and you emerge as digital capital, then that is a profound paradigm shift for the entire economic world. So why is Bitcoin digital capital? Well, the politicians say it's digital capital. The banks have embraced it as digital capital. Now we actually have we have JP Morgan expressing support for the asset class. We have the head of Charles Schwab that's announced that they're going to custody Bitcoin. They're going to let you trade it. They're going to extend credit against it. They're going to let you deposit it and withdraw it in the first half of 2026. That's extraordinary. So what you see now is 12 months ago, I couldn't get a loan against any kind of Bitcoin posted as collateral from any major bank in the United States. Right now, Bitcoin is creditworthy collateral at Merrill Lynch, at JP Morgan, at Charles Schwab, at Texas Capital Bank, at BNY Mellon, at Wells Fargo, and at PNC. And so there's probably a few that I've skipped. I think Citi has just announced that they're going to start to custody and bank Bitcoin the first half of next year. So we have basically progressed through the unthinkable. We've gone from a toxic asset class that the administration was against and the banking industry did not acknowledge, to an emerging asset class that's getting the grudging respect of half of the major banks in the United States, and it's spreading like wildfire. And these are the most conservative, risk-averse organizations in the world, and if they go and do a 180 in just 12 months, that's pretty extraordinary. And if half of them embrace this asset within 36 months, I think that's light speed. So you've seen the banks embracing Bitcoin. Now you're seeing Wall Street. Of course, we all know the story of the success of IBIT, the most successful ETF in the history of Wall Street. I've tracked it pretty closely. What's interesting, of course, is it went from nothing to about $100 billion in less than 2 years. But also, if you look at the emergence of the derivatives market on top of IBIT, it went from nothing to $10 billion to $50 billion. And if you look at the liquidity, it went from nothing to trading $4 to $5 billion a day. It's really quite extraordinary. Public companies have embraced this asset. If it's going to be digital capital, someone's got to be able to capitalize on it. There was one company that capitalized on it in the summer of 2020. And then there was 2, and then there was 3, and then we thought that was kind of cool. And then there were 20 and 30. There were maybe 30 at the beginning, the middle of 24, 60 toward the end of the year. And we've gone from 60 to more than 200 in the year 2025. 200 publicly listed companies, up from 60 in 12 months, is quite a bit of progress in a single year. What's the second best? There is no second best.